Good morning, David Combe here with CBS AM Debrief for Tuesday the 2nd of August, just coming up towards 8:45 here in the Sydney office, and a bit of an interesting roller coaster night there in the United States last night. We saw the continuation of the debt ceiling negotiations, and in fact that's continuing to go on at the moment. The word around town is that there's a $2.1 trillion raising of the ceiling input, and a decline of 2.7, that's trillion, of course, down 2.7 trillion for the 10-year savings spending decline there. Also seeing manufacturing data coming in, which, although we had the euphoria yesterday, a little bit of that was tempered, and I think Jono covered this in yesterday's week ahead report, that once this euphoria was out of the way, we would actually see a return to the reality of some of the numbers that are continuing to come through, and that was no different last night. We saw the figures come through for the US ISM manufacturing for July coming through at 50.9. Expectation was 55, and the prior was 55.3. So that kind of kiboshed things a bit there. In terms of the actual price action for the Dow, we've got a little bit of a feel for that here. So at 12,281, actually got down to just below 12,000, so a 280-point move throughout the session, but then managed to claw back a lot of that, around 133 points, I guess, to end up closing down only around 11 points there. So, yeah, really a case of holding onto your hats and fastening your seatbelts at the moment, it seems, or simply being out of the market altogether and in cash. Having said that, we did say yesterday that the way one could play this was to buy the market yesterday, buy the index, and put a stop loss below Friday's low. It really does look like that is the new low in place. We've got the potential for the US, the largest economy in the world, to default on its debt, and that's sort of as bad as it got. So it's tempting to say that. We saw that 74-point move up on yesterday, rather, and then we've got the SPY suggesting a similar move, almost identical move down, so giving all that up. I'm inclined to think that once we see the RBA announcement come through with a 4.75, we will see a little bit of a rally up, a little bit of a relief rally more than anything else, because of course at various times here it's been suggested, or around the consensus opinions around town, it's been suggested that on the back of those recent inflation figures that we may expect to see another move up. But it looks like the RBA will temper that move up, and therefore will live to live to trade another day here. So, okay. Anyway, enough comment there from me. I'll move on to what the rest of the markets are doing. So ultimately, the futures there, which are actually pointing up, ultimately red numbers right across the Americas, and Europe following suit here, with the Euro top 50 down 2.88. So big move to the downside there. Really very ugly picture. Yesterday, of course, we had all those green numbers. The futures showing through with some recovery with Europe, with the States, with Europe less so. And then, of course, our region, a little bit of a mixed series of greens and reds. Okay, we'll take a look at the commodities here. Natural gas put in a small 0.5% move up. Crude at 116.81 for the Brent in the West Texas, 95.23, so quite a big move down there. I think we did talk about shorting this with a stop at 101 late last week. So anyone that got onto that will probably be doing okay there now. And then we've got a mixture of greens and reds here in our softs, mostly greens though. Big move down on lumber, a little bit of a just under 1% on wool. sugar 2.82, and cocoa down 2.64, 0.64 rather. We've got cotton up 3.22, of the bigger movers, really being the main one. Yeah. Copper rather, $4.40.8 per pound, down just 0.2, and gold at 16.21, down 60 cents. Silver at 39.31, holding fairly steady there. Currencies: euro buying 1.4259, pound buying 1.6302, and the US dollar buying just 77.30 yen. The Aussie buying 1.0976, and the US buying 95.59 Canadian, and just 0.7843 Swiss francs. Some pretty amazing numbers there, really, in comparison to the historical perspective. Okay, so let's take a look here at the economic calendar. We mentioned those manufacturing numbers that caused those gyrations on Wall Street. We've got some New Zealand housing, average hourly earnings. Then we've got our house price index numbers out, as well as that RBA number at 11:30 2:30 to look out for. Labour cash earnings out of Japan, retail sales out of Switzerland, construction purchasing managers index out of the UK at 6:30, and Eurozone producer price index later on this evening, which is a high significance piece of data there. US personal consumption spending and personal income numbers out of the UK. That's a sort of tier 2 level set of figures there. Going into tomorrow, we have some data out of Europe that's tier 1. Other than that, that's about it. And then we'll be focusing on the end of the week there to the non-farms payrolls, being the first Friday of the month there, and that will give us further clues as to just how the US economy is ticking along there. If recent evidence is anything to go by, it's probably not going to be that impressive. Okay, let's look at the Half and Trader here, and a couple of the stocks that we've been commenting on. Trying to trade. Okay, Aluka yesterday did quite well on that uptick in the market. So in fact, Friday really was pretty good buying for that. That continues to be at the top of the Vector Vest value, safety and timing, or very close to the top. Some of the gold stocks taken a little bit of a bumpy ride in the last few sessions, but most of them put that back on yesterday. Some Barbara, Medusa, Kingsgate, all doing okay. Caltex continues to disappoint. We're really sort of waiting or wondering if that's worth another crack at. We're down here at sort of what looks like a bit of a double bottom, but it's really hard to play with crude back up near the $100 mark again, although that is starting to come off. GPT Group, yes, again disappointing. Got stopped out of that, so not sort of rushing back into that one. ResMed, a little bit of a similar situation in terms of a sort of a bottoming pattern. If we bring up some more recent data here, if it's going to let us. Okay, so we're down near this. We've got old levels of resistance around this 270, 70, 80 level, and really taking a bit of pot luck here to jump in there. But I do think that some of these pharma stocks are looking all right. I think that a lot of them have been really sold off on the back of strong Aussie dollar because of bringing most of their revenues from overseas and have large operations in the US. So this is affecting their profitability. We're looking at CSL here, which is another one I think that's worth a look at. Back down on multi-year lows here, and I would have thought any sort of weakness in the Aussie dollar should see this back pretty promptly into the mid to low 30s here. But really, keep your eye out for some sort of a reversal signal. That's looking a little bit like a bit of a pattern there that you could, bit of a morning star for those of you that like to look at candlesticks. And of course, we know when we're wrong pretty clearly if we get below this $30 level, which it's touched down on, as we can see, a number of times, and tended to find support at this level. Okay, so I think I might leave it at that, and we can all get stuck into the day and see what happens. It's going to be a fairly full day of data here. Any questions, please feel free to give us a call. 02-8267-9003 is my direct line. Love to hear from you. Okay, bye-bye. Bye for now.